Okay, it's time to make a start. Morning, everyone. Thanks for coming along today. It's great to see so many familiar faces here. Yeah, it's a positive, isn't it? My name's Grant Bacon. I'm the chairman of Turner's Automotive Group. So there's a little bit of housekeeping, which we have to do every year. So if the place catches fire, head out those doors, down the escalators, and the fire wardens will meet you at the bottom. And if you need a bathroom stop, just out those same doors and hang a right. The notice of meeting and 2026 annual report and financial statements have been circulated and made available to shareholders. And for those not here in the room, for those of you who are here in the room, your Tina air freshener is on your seat. A quorum is present and therefore I declare the meeting open. Now I'd like to introduce my fellow directors, and if you guys would just raise a hand when I say your name. So Matt Harrison, Al Petrie, John Roberts, Lauren Quaintance, Anthony Vrians, and Todd Hunter. And also at the table with us is Aaron, the company CFO. There are also a number of our senior managers and staff here today, so thank you all for coming along as well. Also in attendance today are the company's auditors, Staples Rodway, our legal advisors, Chapman Tripp, and other advisors. So thank you to all those firms that provide valuable services to Turners. Today you'll hear presentations from myself and Todd covering the last year, but probably more importantly, we'll be updating you on our expansion progress and give you some colour on what we're seeing with trading at the moment. Following the presentations, there'll be an opportunity for discussion and any questions you may have. We'll answer the questions on the resolution at the time they're proposed, and there will be a further opportunity at the end of the meeting to ask any other general questions about the company and about our operations. Now, this is all sounding pretty familiar, but I say the same thing every year. We don't even have to alter this. But FY26 has been another record year for the business. In what has been a difficult trading environment, we're continuing to focus our growth plans. New branches are developed, our finance business continues to grow, and we've done some great work on the funding side of the business. We finished FY26 really strongly with a record quarterly performance, but quickly found ourselves in very choppy waters at the start of FY27 with the Middle East conflict kicking off and a fuel crisis on our hands. As you would expect, our team at Turners has responded very well to this and continue to do an outstanding job. Despite this short-term uncertainty, we continue to push on with our plans and remain very confident in the future of the business. We've shown this historic perspective before, and it's important to reflect on the progress we've made. Apart from the COVID impacted FY20, we've delivered growth every year out of the last 11. Our track record does speak for itself, and for me as a substantial shareholder, this is a fantastic outcome, and obviously for you guys as well. We have a good plan, we have an excellent team, and we know how to execute on the plan, so there's much more to come from Turners. FY26 is our sixth record result in a row. The big three auto-related divisions delivered strong growth year on year, and it was very much a story of improving consumer confidence through the year. However, momentum has slowed a bit and consumer confidence has also dropped due to the conflict in the Middle East. The business is in an excellent position from a funding perspective. We have new facilities with the banks and a termed out securitisation warehouse and have improved our pricing, increased our capacity and reduced our capital requirements. Our diversified earnings continue to be a real strength, and we've seen our annuity businesses contribute at a higher level as the auto retail business has been affected by the continuation of the Middle East situation. But despite all the challenges, the team remained very focused and motivated to continue the run of records. Now, I won't spend any more time on FY26 as these have been well covered, particularly by Aaron and Todd in May when we announced. We do operate to a simple formula, and it's another thing I repeat every year, but these simple concepts do work very well for us. If we provide a quality environment and conditions for our people, this will give us the best chance of providing a quality experience for our customers, and this should lead to quality outcomes for you, our shareholders. We now have 67% of our wider team enrolled in the employee share scheme, This turbocharges our high level of engagement to even higher levels. And as you all know, I'm a big believer in skin in the game. Our customer experience continues to rate highly, and the results for our shareholders have been great. Now, I like this graph because I'm a substantial shareholder, so it's been good for me, and you guys as well, obviously. The compound annual growth rate is pretty impressive, and I think around 14% over this 11-year period. And I was just talking to someone earlier, I don't think many NZX companies could lay claim to that. Shareholders should be very happy with the return over the last 12 months as well, as not only have they received record levels of dividends, but the share price has re-rated as well. We've talked previously about our level of confidence in our organic growth plan. We're executing well, and there's still plenty of runway for delivering on this plan. As I mentioned at the last meeting, we try and take a 100-year view on this company. So Turner's been around since 1967, and we want to be making decisions now to position it for the next 40 years. Earlier this year we had an investor day, and I would encourage those of you who haven't seen the material to have a look at it to understand the things we're thinking about. We outlined for investors our new medium-term profit target of $100 million profit before tax for FY31. Essentially, this is mostly organic growth and potentially a couple of acquisitions on top of where we finished in FY26. The organic growth will come from new auto retail branches, plus growth in the finance business, direct-to-consumer growth in insurance, and growth in Turner's servicing and repairs. This will be the fourth target we've published, and we think these targets work well in terms of helping people understand our own confidence in our strategy, but they also make us hold ourselves to account, and we don't shy away from these targets. I do get asked a lot why I love this company, and I get asked more recently actually because I've written a book about some of my business stories, including Turner's, available at all good bookstores. Only $38. It's actually number 3 bestseller at the moment, just not being one to brag. No, I do love cars, and I love being around the business, and I like the fact we have a group of people on the board and in executive positions, and right now across the broader team who all own a piece of the company. We have a really strong and positive culture here, and our used car platform is very difficult to disrupt and replicate. I think this is one of the most misunderstood aspects of the Turners business, and that is the size of the competitive moat. And lastly, we're very focused. We're very growth focused. I think many companies have an unhealthy focus on risk and not enough focus on growth, and we are definitely not like that. One key message I'd like to leave you with is that there's a lot more to come. Now, before I hand over to Todd, I'd like to acknowledge the efforts of our team, from our board of directors through to our operational teams who deliver day in and day out for our customers and for our shareholders. This group of people continue to be totally committed to the cause. We actually call it bleeding blue because blue is our corporate colour, but these people are always prepared to go above and beyond. We're really lucky to have such a talented and hard-working group of people in the business. Now, another special mention here must go to Todd and Aaron. So both these guys have been with the company for 20 years now. We're going to be celebrating that this evening. But guys, I'm really proud of what you've achieved. You've done a stellar job, and I think it's worth giving them a round of applause. With that, I'll hand over to Todd.
Thanks, Grant, for the kind words and for the book advertisement.
Are we expecting a surge of sales?
No Pit Stops is the book title, just in case you were wondering. Okay. Good morning, everyone. Great to be with you today. And just going to kick things off with a few slides on what we see happening in the used car market at the moment. I think it's fair to say it has been a bit lumpy out in the vehicle markets at the moment. Overall used car volumes in the first 4 months of this year are tracking around 3% behind the same period in 2025. There has been a noticeable shift in the market since the fuel shock hit New Zealand. It's definitely impacted consumers' confidence, and therefore we are still seeing demand for vehicles at that lower price end of the market at the expense of the the higher value cars, and particularly diesels and those larger engine petrol cars like the SUVs. What we would expect though is that will revert as the economy improves, as the oil price comes down, and we saw that in that November to sort of February period last year where we had a very strong finish to the financial year. And as you can see on that chart on the right, dealer numbers are flat, and we've seen stronger demand for used imports as those dealers look for small hybrids in particular, which is where a lot of the demand in the market is for. I thought it would be interesting to look at the relative market shares of new car sales just to help illustrate and highlight what we've seen since the Middle East crisis sort of kicked off. And you can see the first line here is the share of new car sales in the diesel fuel space, and you can see that really severe kind of drop that happened immediately after things started kicking off. Then the same thing happened with petrol cars. So this really marked shift down in terms of market share. And sort of unsurprisingly, the shift up in battery electric vehicles and plug-in electric vehicles. So there has been some significant sort of shifts in that new car space, and undoubtedly that's flown through into the used space as well. And then lastly, hybrids, which have definitely come up and then sort of dropped away a bit. I mean, some of this will be affected by shipments and things like that, but essentially we've seen a drop in petrol and diesel and a lift in EV and hybrid cars. The other material change I wanted to flag is just the number of car brands that are available in the New Zealand market. So 3 years ago, that was around 50. And today it is around 80. So there are just some significant shifts going on in terms of the composition of that new car market. And obviously it's the Chinese brands that are really making a big difference here. I was saying to someone earlier, the pie is essentially the same size, it's just being cut up into infinitely small bits. So yeah, some challenges in that new car space for sure. In terms of the business divisions, one of the key messages at our Investor Day was that we have great businesses, but they are even better together. And with the level of integration, data analytics, the lead generation that's happening across the group, there is no doubt that those businesses are much stronger for being part of this group. And what we are doing is continuing to build out and perfect this used car platform that we've put together. So just starting on the left, very simple, but we want to sell someone a car, we want to lend them the money to buy that car, we then want to protect that car through our insurance products, we want to look after and maintain that car through the life of that ownership, and then at the end we want to buy that car back off that person and put them back to the beginning again and sell them another car. It's pretty straightforward, right? But I just think it's worth sort of explaining why we are doing what we're doing. And to put it simply, we're just trying to take a little bit of margin through each part of those, out of those steps. And to have as many customers as possible, using every one of those components as well. I'm not going to spend too long here reviewing what we did last year, but we were obviously very pleased with a record year in the auto retail division. And as I mentioned before, what turned out to be a pretty tough first half and a much stronger second half as the economy in New Zealand kicked back into gear. And as we called out in May, trading has definitely been impacted by the Middle East conflict. We think this is short-term in nature, but selling diesel and larger engine SUV type product has been very challenging, and the prices on those units have unsurprisingly dropped, and by some quite material percentages. Our expectation is that this will improve, and we generally see an uplift through the spring and summer period, and we're hopeful we'll see that again. It's what we've typically experienced. What I do want to spend some time on is probably more about the medium term kind of things that we're doing to keep growing our business, and that's really our branch expansion plans. So we have 6 projects underway at the moment, and another 5 opportunities that we are in various stages of negotiation around. So you can see that at the top of that right-hand side there. So we're confident that our expansion pipeline is filling really, really nicely. And as we signalled at our Investor Day, we're targeting another 15 branches by FY31, which helps drive us towards that 100 million profit target. As the slide says, there's no profit impact from those new branches in FY27. This is very much a build year for us. We obviously made these purchases and got these deals in place, and so this is the year that we are digging in the ground and building and things like that to get them ready for FY28. But we think this property ownership aspect of our business is largely overlooked by the market. And I think, as Grant mentioned before, owning properties for us is part of this 100-year view. We'll be building up this really nice property asset that over time will grow in value and is just another value sort of accretion opportunity for our shareholders. So what I wanted to do was just quickly go through each of the projects that we've got on the go at the moment. So starting with a new Turner's Car site in Wirri. So this was a property, I think it was our second property we bought, Aaron? Yeah. Out in Roscommon Road. So 10,000 square metres. We've been running a trucks and machinery branch there. And when we first moved into that site, there was very little around us actually, and it's all sort of grown as you'd expect. But we think that's a great location now for a cars branch. So trucks and machinery move out to Drury, and we'll have a cars branch there in the next financial year. And that will contribute sort of another 700 odd K to our bottom line as a result of that. So as you can see, a very high profile site on Roscommon Road and very adjacent to the motorway and things. So I think that'll work really well. That's what it'll look like. We've sort of essentially got the offices there already as part of the trucks and machinery operation, but the processing site at the sort of left-hand side of that picture is new. This is another exciting project we've got in Tauranga, so this will be our second branch in Tauranga, so really extending our footprint in that important geography for us. So it's in Greerton. Can't quite see from that picture, but it's very close to sort of the township level. It's got a roundabout sort of very adjacent on that sort of bottom right-hand corner of the site. Quite a big project for us in terms of there's an old RSA there, and we're in the process of, well, it's demoed now. This is what the site currently looks like. So quite a big project in terms of what needed to happen to get that site ready for building. But we think it's going to be a great location for us. It's a very good catchment area, and that's a sort of site looking what it will look like eventually when we've finished building. So yeah, another exciting project happening there. Wanganui is another new location for us. We've got good experience now in terms of how we enter these new markets. This will be the smallest catchment area, Mark, that we've been in, right? Yeah. Yeah, so catchment area is sort of 50 to 60,000 people. You can see again, it's sort of very high profile site. We're sort of well advanced there. I think the likelihood is we'll probably have that sooner than Q1 FY28, but we'll see how the project sort of evolves. We've had to demo a couple of residential houses and an old restaurant that was on the site. So again, contractors working very well there and kind of running ahead of time. So we're going well on that one. A more recent one that we've purchased is a new site in Hastings, and this has been an existing new car dealership that's been out of business for a little bit. So we've bought the site, so you can see there it's a kind of corner site. We're demoing the buildings on that sort of right-hand corner, sort of in the process of consenting and getting things ready for works to start. So this will be the second site for us in the Hawke's Bay, which is something that we've been targeting for a while. Just had to find the right place, and we think we've definitely got the right place now. That's what the site will look like. So we keep the existing building kind of on the left-hand side there, and essentially create a big yard to present the vehicles. So that again will be a very good catchment area for us. We've also just this year bought some new land in Hamilton, so this is on Te Rapa Road. It was land owned by Foodstuffs, so there's a New World next door, and this was excess land. And this is a replacement for our big, kind of last of our sort of big super sites that was on Avalon Drive down there. So we're currently in a lease there, and we were pretty keen to get to a new site. So a bit like Christchurch, where we had to sort of put the bits of the puzzle in place. This is the first bit of the puzzle for us. So again, very, very good opportunity for us down there. And to be honest, in a much more higher profile location than we are now. So that's good. That's underway, and that's what that site will look like eventually. You can see a very consistent kind of look and feel now. We have the processing shed at one end, and then the office space on the right, and obviously it's very blue. We love blue. And then this is the new home for our trucks and machinery business, so the one that's relocating from Wiri. This is further down on State Highway 1 down in Drury. It's a lease site, and again the project running well ahead of time, and will be a very high profile site for us, running down the edge of the motorway there on the right hand side as you're heading south. So looking forward to having that in place. So as you can see, lots of work going on in terms of those branch expansion plans. Mark Wells and the team doing a great job there. Okay, so that's kind of auto. Moving on to finance. A very strong performer for us in FY26. One of the three divisions that had a record profit. What I suppose I want to reassure people is that we're continuing to maintain our discipline around credit quality, and we've seen even further kind of improvements in our quality metrics. So that is a non-negotiable for us around growing this loan book. And this is probably the one highlight I'd really like to flag with you today, is that it's this consistent growth that we're now getting out of finance. So finance is very much back into growth mode. We had strong growth over FY26, so the loan book was up 27% over that 12-month period. And in the first 4 months of this year, we've grown that a further 7.5% since the end of March. So we've seen that momentum really continue, which is great. So that loan book now almost, I think, probably this month will hit through 600 million in total loan book, which is great, good milestone to achieve. And as you can see here, it's a slide we've shown before. Consumer arrears tracking at 2.1% in July against the industry figure of 5.2% for auto loans. So the top red line is the auto loan industry in New Zealand. The blue line is our line. And as you can see over time, those jaws are starting to open up. So the industry gets higher and we get lower. And this means we're outperforming the arrears in the broader market. So absolutely validates our strategy of being focused on the quality end of the borrower market. I think the other really big benefit from focusing on that quality end is that it delivers us great operating leverage. So we're growing our loan book, but having to add very few people to help service those customers. Because those customers are so reliable, because they stick to their commitments, and thus they're easy to serve. So we can grow the loan book, but don't have to grow the number of people we have in the business. So the upside for us is much, much greater. Okay, on to insurance. So like auto retail and finance, insurance also had a record year of profit performance. Very stable and consistently performing division in the group. Our distribution networks are strategically important, and we're continuing to build out our digital direct capability as our additional growth channel. We've had good, strong premium growth across all our portfolios, and our dealer and finance broker partnerships are the sort of key driver there. In Turner's servicing and repairs, we continue to get to gain traction in the servicing and repairs business. Our partnership with VTNZ, where we've integrated into their failed WAF process, and comms is starting to deliver repair bookings So we're focused primarily on the Auckland market there. It's still very much in its infancy, but we expect that to be a really good growth driver for bookings for servicing and repairs. And we've seen some good wins with small fleet owners and with one of Turner's major lease vendors who now offer mobile servicing to their lease customers. And so we're starting to take bookings for those lease customers. So we're really starting to see this integration thing working well. Lastly, for credit management, FY26 debt referrals were constrained, and we talked about this at the year end because several of our large clients, so essentially the banks, have been through these kind of temporary holds on debt referrals as they sort of undertake big system change-outs for their collections area. So whilst they've been going through those system changes, they haven't been referring debt to us. That's starting to come back on stream now. But as a result, revenue was down 17%, and because of that, segment profits were down 49%. You may recall that we also wrote down the goodwill on EC Credit by $7.5 million at the year end, and with that new intangible valuation reflecting just our more conservative future earnings forecast for this business. But so far in FY27, we've seen all but one of those banks recommence their debt load, and we're seeing really good improvement in profit performance in the first part of this financial year. So yeah, good to see those guys back on track. This is the latest data from Credit Bureau Centrix. New Zealand credit metrics have somewhat surprisingly continued to improve and are at their lowest level since 2021. What this suggests to me is that people are much more aware of their credit scores and the impact of defaults that they might have. I think there's just a general, broader awareness of credit scores now. But I think what we are seeing is people actively and acting conservatively by building savings buffers and keeping on top of their commitments. Consumer behaviour is being shaped by concerns around interest rates, unemployment and political uncertainty, and the result is less spend on discretionary items. So consumers are being cautious rather than stressed, spending less but staying on top of their financial commitments is our interpretation of this data. And just to round out sort of the business stuff, so our key message around funding is that our banks are being very, very supportive of this business. Aaron and his team have done some great work over the last 12 months to improve our funding structures, and the result of that is we've been able to improve our pricing with the banks. They've increased our credit limits and they've reduced the amount of capital that we require to support that funding. And just to give you a quick example of that, we now have enough capital in Oxford Finance to grow that loan book by essentially another 50%. Get it up to that sort of $800 million level without adding any more capital in. So we're very well positioned with the banks. Okay, and then just to wrap up before I hand back to Grant, with the outlook, we thought a good way of showing this was to highlight sort of what has changed and what has not changed since we last updated the market in May of this year. And first, to start with what has changed. I mean, obviously this conflict in the Middle East has persisted much longer than everyone expected it to. That has slowed New Zealand's economic recovery without any doubt, and it has dented consumer confidence. Higher fuel prices have materially reduced demand for diesel and larger petrol engine vehicles, making the first half of FY27 a far harder trading environment than either of the two prior first halves. And although the team in auto retail repositioned inventory quickly, the effect on vehicle margins, so the cars that we own, that we sell through the network, has been longer and larger than we anticipated in May. On top of this, we've had lower sales of ex-lease cars. The reduction in market prices for diesel utes and petrol SUVs has reduced the levels of sales as those lease vendors just take time to adjust to the new market prices. This is an effect we have seen over the 20 years that Aaron and I have been involved in this business. We've seen this, a number of times. As prices come down, those lease vendors just take time to adjust. So Consignment units sold are down 14% for the first 4 months of July. What I would just remind people about, though, that we still have those cars. We will sell them. It's just a timing issue, and they're already starting to adjust their prices more aggressively than we've seen them in the first sort of 3 to 4 months of this year. So we will still get to sell those cars. Secondly, what has not changed? The diversification in this group continues to deliver earnings stability. Finance growth, so that's profit growth in finance, has more than offset the reduction that we've seen in auto retail profits. And group net profit before tax for April to July is 4% ahead of the same time last year. So we've got challenges, but we're still producing group profits ahead of last year. And I think it's a great result given the conditions that we've been operating in. We've seen strong loan book growth continue, at 7.5% since March, and arrears still tracking at very low levels, despite the pressure on New Zealand consumers. And insurance and credit management are both broadly in line with last year. Most importantly, what has not changed is our long-term strategy. We remain extremely confident and continue to work at pace on both our auto retail branch network expansion and our finance book growth opportunities. We are absolutely 100% confident in that strategy. And so what does that all mean? We continue to target 65 million profit before tax in FY27. So you may recall that was our FY28 target, and we called out at the end of last financial year that we would achieve that a year earlier. We're still pushing very, very hard to achieve that number a year earlier. But without a resolution to the Middle East situation and the volatile swings in oil prices and a recovery in consumer confidence, sales of large engine vehicles and diesel product we think are still going to be challenging. And that creates some short-term uncertainty and some risk in achieving that 65 million a year earlier. What I would point out, though, is a faster recovery around that situation has the opposite effect. Consumers will be more confident, margins will improve, and so we get that kind of opposite impact. We're just calling out that there is some risk at the moment. But I want to reiterate the short-term nature of this environment and that we fully expect strong earning growth momentum to return in FY28. Nothing has changed in management's conviction in that medium-term plan. Turners is tracking well towards its 100 million net profit before tax target by FY31. Thanks very much, everyone, and I'll hand back to Grant now.
Thanks, Todd. So this time, if anyone would like to ask a question or make a comment about the presentations and the result. Ask any of us, by the way. Yeah.
Alan Best, shareholder and proxy holder for members of the Shareholders Association. I'm interested in, we recognise that this is fairly early days for the service side of the business, but having been a manager in charge of services, I appreciate that there's some really specific challenges. First of all, maintaining a staff of reliable and qualified people to do that out and about type service. Secondly, the operating within margin limits, and management has a challenge to make sure that they do operate within those guidances. And finally, there's a brand challenge always when you're operating in a service business, because you're dealing with a very splintered market, as you have done with second-hand car sales. So I wondered if you could comment a little bit on the structure and the challenges that you're overcoming with that particular business.
Yeah, sure. If I just touch on each of those. So we don't typically have a challenge finding people. Most of the technicians are happy to get out of a workshop and have a bit more control over their day-to-day working life and being in a van and sort of moving around Auckland or Hamilton or Tauranga. They enjoy the variety rather than having some workshop manager be mean to them. So that's not a challenge. We are certainly looking to prove this model out, and our focus is really for Richard Wafer, who runs that business. So he still owns half of the business with his co-founder. We really want to see him prove this Auckland market out first. So we're focused, fully on that before we roll out to any more locations. The number one challenge is just building demand and building awareness that having your car serviced and repaired in your driveway or at your work is an option, and so that's our challenge.
Okay, Ron Robertson, that was a great presentation, very informative, and more than covered the only question that I really have, which wasn't in regard to this year's earnings, but that you have reaffirmed the 5-year goals, aspirations of the company, and the $100 million profit before tax. You've already covered it very well. Anything additionally you'd care to say about that?
Well, I don't know what to add really, but we're trying really hard towards it, and when we set goals, we like to overachieve them as well. So, yeah, that's all I'd add. Yeah. All right. Seems to be all the questions. Okay. I'd now like to move to the resolutions before the meeting. These were notified in the notice of meeting, and explanatory notes have been provided. Voting on each of the resolutions in the notice of meeting will be by way of poll. Baker Tilly Staples Rodway, the company's auditors, will act as scrutineers. Please use the voting paper you used in the mail. This doesn't quite make sense, but the voting paper you received in the mail or were given when you registered for this meeting. If you don't have a voting paper, you'll be able to request one from the scrutineers. Only shareholders, proxy holders or corporate representatives of a shareholder may vote on today's resolutions. So Resolution 1 is to record the reappointment of Staples Rodway as auditors of the company and authorise the directors to fix the auditors' remuneration. Does anyone have any questions or matters for discussion on Staples Rodway? Alan? Yeah.
Thanks. Mr. Chairman, I think I'm raising something that's already been answered partly by Todd, but the NZSA Shareholders Association has asked the question of the company about whether there's any appetite to put the audit business up for tender, because it has rested with Staples Rodway for so many years without much change. And it's important that we get an idea from you of the internal procedures, I suppose, that enable you to preserve that, or to ensure on behalf of shareholders that there is sufficient independence of the auditor. Just having one aside on that too, I do remember that as a Shareholders Association, we were very keen a few years ago to see that other auditors be entered into the race for auditing, and rather than simply follow the big four. So we're very pleased that Staples Rodway is one of those that has come in to a larger and growing company on that matter. So could you make us a few comments on the internal audit procedures?
Yeah, we might pass that one on to Aaron, because he's the closest to that side of the business.
Thanks, Alan. Yeah, in terms of the appointment or ongoing appointment of Baker Tilly Staples Rodway, I think that we are comfortable as a group that there is appropriate auditor independence because they do follow strict partner rotation policies and guidelines as outlined by the FMA. And it's my understanding that Turners is one of their larger customers. So what that means is that our audit file gets significant FMA scrutiny when FMA are reviewing the work of Baker Tilly Staples Rodway. So I think where we value Baker Tilly in particular is that it does provide some diversity from the Big Four. They are extremely price competitive. They value our business, but we're equally comfortable that the independence, there's no issues with independence, and in particular, the heightened level, I would argue, of scrutiny that they get, us being one of their larger, if not largest clients from the FMA, kind of should give our shareholders some comfort that, auditor independence is being pretty strictly followed.
Thanks, Aaron. All right, got someone down the back there, Barbara. Yeah.
Do you still get price indications from the other auditors as to what they'll charge?
We haven't done a pricing exercise for a number of years, but it's pretty public information. You can see in an annual report what the price levels are for NZX 50 listed companies, and that does give us a lot of comfort. And we typically, we're pretty, not mean, but we're pretty disciplined around cost in this business.
No one else? Okay. Resolutions 2 through... I should do the formal part here. I'd like to move this motion. Do I have a seconder? Thank you. The next three resolutions are in regard to director elections for Matthew Harrison, Lauren Quaintance and Anthony Vrians. We believe that having... Just when I was saying how good you were. Can't blame myself here. John Roberts. We believe that having directors with relevant industry, commercial and governance skills is essential for the continuing success of the Turners Group. Continuity of people in this group is also very important. We currently have directors with hands-on experience in the finance, insurance and debt management sectors, as well as directors with expertise in governance and diverse experience in entrepreneurial skills in sales, digital marketing and communications and business growth. So I'll ask each of Matt, Lauren and John to come up and speak in support of their re-election, and then after they do that, well, part of that is you can ask questions, and after they do that we'll do the proposing and seconding. So can we start with Matt?
Thank you, Grant. Good morning, everyone. It's a pleasure to be here. My name is Matthew Harrison, and I'm very proud to be standing here today as a director of Turners. Turners is an exceptional company, one which I absolutely love dearly. I also love cars, so that helps, a bit like Grant here. And I'm very proud to have been sitting on the board since 2012. I also want to acknowledge our fantastic management team that we have, led by Todd and Aaron. They do absolutely amazing job. I think we're very lucky and probably one of the luckiest NZX listed companies. I'd also like to say thanks to my fellow board members who are very exceptional in their role, led by a fantastic chairman, Mr. Baker, who's been there for a while, but he's doing a great job. Most importantly, I also want to say thanks to our staff at Turners, Autosure, Oxford and EC Credit. Without this large team of dedicated and passionate people, we simply wouldn't have the great business that you see here today. So thanks, team. As you may be aware, I joined the board when I sold EC Credit Control to Dorchester Pacific, which was back in 2012. I've been fortunate to have been involved with Dorchester and then Turners since this time. My family is quite fortunate to have a combined shareholding of approximately 6% in the company, and I'm very proud to represent these interests at the board level. I firmly believe that our family's goals and views as shareholders are very much aligned with every shareholder in the company. We certainly share all the same goals with growth in dividend, sales, and obviously growth in the share price. Presently, I'm chairperson of the Lending and Credit Committee. This is a role which I very much enjoyed, and I think, given my history within the credit industry, I believe that I can add some value to this role. Our LCC has been able to improve the performance of our finance business over the last few years, as you've seen, and we've also seen some very good growth in the loan book over the last couple of years. In addition to this, I also sit on the board of our property company. I'm quite involved in this, mainly because it's something I very much enjoy. I think Mark Wells, who leads that part of the business, probably doesn't agree with me all the time, but we seem to get a few things done, and we're certainly doing quite a good job with adding to the property portfolio. I really embrace this, and I believe that the acquisition and the development of our property footprint is extremely valuable, and over time it will certainly generate lots of shareholder wealth. I stand here before you asking for your support in my re-election as a Director of Turners again, which in my very humble opinion, we are one of the best run and most impressive businesses on the NZX. That's it. Thank you, everyone. Any questions? I'll hand back to Grant.
Thank you, Matthew. Very eloquent. I would like to move the motion of renewing Matthew Harrison's directorship. Do I have a seconder? Thank you. 2 seconders. Thank you. All right. Lauren, could you please come up and speak?
Good morning, everyone, and thanks for the opportunity to speak. I'm Lauren Quaintance, and I'm very pleased to be seeking your support for my reappointment to the Turners board. My relationship with Turners actually goes back about 5 years now. I joined initially as an emerging director in October 2021, where I was working alongside the board and getting to know the business, its people and its strategic priorities. Then in April 2023, I was appointed as an independent director of Turners and subsequently joined the board of our insurance business, then DPL, now named Autosure. One of the things that's impressed me most about Turners is the quality of its strategy and the discipline with which it executes. This is a business that has repeatedly demonstrated its ability to adapt, whether through changing economic cycles, COVID, shifts in the automotive market, or changing customer behaviour, and more recently an oil shock. I believe my experience brings a complementary perspective to my fellow directors. My executive career was focused on customers, digital, data, marketing, media and sales, and I have been myself an entrepreneur who founded and scaled a business that was acquired by News Corp in Australia. Since returning to New Zealand, I have deliberately built a broad governance portfolio. Alongside Turners, I'm an independent director for NZX-listed Vista Group International, the Crusaders Super Rugby Club, the South Island retail chain J. Ballantyne & Co, and I'm also chair of Christchurch NZ, the economic development agency for the city. These roles give me exposure to a diverse range of businesses and sectors, from financial services and automotive to sport, tourism, retail, technology and the screen industry, as well as deep insight into what's happening in one of our most important markets, the South Island, where Turners has made significant investments in recent years. There's a common thread across all of these things. It seems quite diverse, but I guess understanding customers, using data intelligently, navigating change and ensuring strategy effectively translates into execution is what I try to bring to the board table. I believe those capabilities are increasingly important to Turners. The opportunity ahead is significant. Turners has built a strong platform across automotive, finance and insurance, and I believe there's considerable scope to continuing to deepening customer relationships, using technology and data to improve the business and creating further value from the scale and diversification that Turners has built. I'm particularly excited about the company's ambition to keep growing towards its FY31 target, including the aspiration to deliver 100 million in net profit before tax. After nearly 5 years with Turners, I think I know the business well, with all its quirks and things that make it quite different to a lot of other listed businesses, but also make it great. I have great confidence in its people, who do an exceptional job in its future. And I would very much like to continue the opportunity to contribute to the board in the next phase of growth. Thank you. Yes. Oh, questions? Questions?
So I'd like to move the motion to reappoint Lauren as director. Do I have a seconder? Thank you. All right. Last person to come on is not Anthony, it's John. Sorry to disappoint.
Thank you, Grant. No, I'm not Anthony. I'm definitely John. Good morning, everybody. John Roberts, just to clarify. I've been an independent director with Turners now, the automotive group, for the past 10 years. I'm also director of AutoSure Insurance, Oxford Finance, chair of the Audit, Risk and Sustainability Committee, and sit on the Credit and Lending Committee for the finance company. As the others have mentioned, the last year has been a total focus on executing the 5-year plan and get us to a net profit before tax for this financial year just passed of 63.2 million. I thought I'd just do a quick reflection on the 10 years since I joined the board of the company, and it shows what this company actually and what the team have delivered to shareholders. 10 years ago, a net profit before tax of 21.6 million, this year 63.2 million. Earnings per share has grown from 24.7 cents per share to 50.4 cents per share, and the dividends grown from 13 cents per share to 33 cents per share. And the share price has grown from $2.70 10 years ago to $8.10 today. In anyone's language, that's a real success story for our shareholders. Not to mention that we're now in the top 30 companies on the NZX, which in itself, we thought, getting to the top 50 was a real milestone, and now we're in the top 30. For me personally, some of the major highlights in the past year have been the ongoing involvement in the development of the iconic Tina from Turners campaign that we now call Tina 2.0. It's unquestionable. This is one of the most highly regarded campaigns in New Zealand, and has helped transform the business and build the brand into a persona of a reputation that we're the only place to go to in New Zealand with confidence if you're selling or buying a used car, truck or piece of machinery. Interestingly, the strategic thinking behind the development of this brand program is now being applied to our AutoSure brand. As we now move this business to the next level of growth, we think it's got a stunning opportunity to really turbocharge that business. For those that asked the question last year, we were also very successful in lobbying the current coalition government to scrap the ridiculous climate emission reporting regime for public companies who had a market capitalisation of 60 million. That's now been lifted to $1 billion. I mean, that probably saved us this year between $500,000 and $1 million of unnecessary cost in reporting. However, having said that, we're still collecting the data as we have the infrastructure set up just in case we get a change of government and we end up in a Groundhog Day, which would be pretty horrible. However, it has, as I said, it saved us a lot of time and money over the past year. Another highlight for me has been the ongoing work with the finance company to ensure that we're at the forefront of all credit changes, either by government, regulation and or new data sets that we can import into their business to help the credit decisioning process. As a lot of you know, that's a key area of interest for me, given my years of experience in banking and finance. Our focus is quality customers, and that's where we'll stay to keep our arrears rate low. Hand in glove with that, Todd put up a chart before that showed where we sit with this, on the industry average as reported by the Credit Bureau Centris Group, which is the country's leading credit reporting agency. I'm actually chair of that group. So again, that gives me very early insight that I can bring to the board table to talk about what might be manifesting out in consumer land. I also keep pretty close to the consumer pulse via my involvement as a director and investor in a company called Apollo Foods. Most of you will know that as boring oat milk and picky apple juices. But again, this keeps me very close because I'm actually out in supermarket land a lot speaking to consumers as they pick products off the shelf. 12 months ago, I was appointed by Minister David Seymour as chair of the regulatory body of Pharmac. And again, interestingly for me, this keeps me very close to what's happening at a health level of the country, because I meet with the Ministry of Health on a regular basis and other sector bodies to find out what's the game, especially in provincial New Zealand, what's keeping them awake at night. I'm a shareholder in Turners, like all of you. I firmly believe that my interests in this company are totally aligned to all of us. And I'm 100% committed to the business, and I'm 100% committed to achieving that $100 million net profit before tax target. And working with my valued colleagues both at a board level and at an operational level. I'd love to continue with this program and be part of the roadmap, and I really appreciate your support. And I'm happy to take any questions. Thank you. None? Okay, thank you very much.
Just
hang on. Yeah.
before you disappear,
Yeah.
you mentioned Tina,
Yeah.
which is an iconic advertising for Turners, brilliant actually.
Yeah.
Note that she has gone back to Samoa. Has the business got an ongoing contract with her, and how does that sit?
Yeah, the answer is yes. No, he's not here today. Greg, do you want to answer that one?
So yes, she is currently residing in the islands, but we keep in close touch with her, and she was back here recently actually and caught up with her. And yes, we have an ongoing contract with her for the long term. So yep, no, she's part of the team, so to speak.
Any other questions? No, good. Thank you very much.
Thanks, John. So I'd like to move the motion of the re-election of John. Do I have a seconder? Thank you. Okay. Down to my last piece of paper here, you'll be pleased to know. Oh. Okay. Many shareholders who are not attending the meeting have voted by proxy. I hope these numbers are up to date. I think they are. They're up to date last night anyway. I wish to advise that the proxies have been received for 28,053,145 shares, representing 31% of the total shares on issue. Those of you voting here, please complete your voting paper by ticking for, against or abstain in the appropriate place on the form, and ensure you have signed the form, please. Please do not tick the discretion box. If you have any difficulty or do not have a voting paper, please raise your hand and someone will assist you. Once the voting has finished, scrutineers will collect the voting papers. So we're going to have just a 3-minute recess to enable that to happen. Sorry? Oh, sorry.
It's not in regard to Mr. Roberts' general question.
That's right.
Okay, back to Todd. In your part of your talk about the expansion of the branches, you didn't mention Christchurch. Was that an oversight, or could you just comment on what you're doing down in Christchurch?
Yeah, sure. Christchurch was a big year for us last year. We went from 1 to 3 different sites, and so we've opened 3 new branches in Christchurch. You might have missed it, but on the opportunities list, we have an active kind of negotiation going on there for a 4th site at the moment. So, we're kind of looking for something in the northeast of that Christchurch kind of city region. But the 3 new branches that we have there are performing, very well.
Okay. And the final question, kind of an indelicate question that occurred to me when I recently attended a rest home retirement village company. And I feel like the question has got some applicability to this company as well. And it is the matter of what is called key man insurance. There's a couple of especially key men in this company that I think we'd all hate to lose. you, Grant, and you, Todd, are you guys insured in case you burn out or in case you just have some health problems, that incapacitate you for a few weeks or a few months at a time?
Well, the short answer, I thought you were going to say we should be at a rest home for a moment, so I'm glad that had come. No, we're not insured is the short answer, but I think there is a lot of talent in the company, and Todd and I get to get the oxygen because we're at the head of the company, but we've done a lot of things to get other people in the company more included in the day-to-day running, so if things do go awry or one day we want to retire or do something else, that there's a good talent pool coming through. And you will have seen that Todd's gone from being a CEO to a CEO and director, so we've got him on the board. We've got Greg, who spoke earlier. He comes to all our board meetings, so we're just trying to make sure that there's a lot of knowledge and a lot of talent and not too much dependence on any one person. Yeah, so we're definitely conscious of it. But it's a good question. Okay, I think we might have finished voting now, haven't we? Okay. Well, thanks everyone again. That brings the meeting to a close, and please join us for some refreshments. Thank you.